Hey everyone, thanks for joining us for another deep dive. I know things are pretty crazy out there right now.
Yeah, definitely a lot going on.
Especially with the economy, it seems like everyone's a little on edge these days, and you know what that means.
Lots to talk about.
Exactly. You guys have been sending in some great articles, and today we're going to be tackling one that really caught my eye.
I saw this one too. I think a lot of people are feeling this way.
It's called Are Tariffs and High Economic Uncertainty a Reason to Sell Stocks? By Alec Young.
Published February 24th, 2025.
Right. So let's break it down and see if we can, maybe calm those nerves a little bit and figure out what's really going on.
Sounds like a plan.
All right. So the article starts off with this kind of interesting statement. It says, bull markets actually thrive on worry. Now, that kind of threw me off at first because you would think like a market fueled by optimism would be, a better sign of growth, right?
Right. You'd think so. That's kind of counterintuitive, isn't it?
Totally. So what's the deal with that?
Well, the article argues that when everyone's already super optimistic, there's not a lot of buying power left to push the market higher.
Ah, I see.
It's like a party where everyone's already there.
Yeah.
The energy might start to fizzle.
Yeah.
But if people are still trickling in,
It could keep going.
yeah, the party might just be getting started.
Okay, that makes sense, I guess. But how do we even measure this economic uncertainty thing?
Yeah, good question.
The article mentions something called the U.S. Economic Policy Uncertainty Index.
Right.
Have you ever heard of that?
I can't say that I have.
So it's basically this index that tracks things like news coverage, how much are they talking about economic policy, congressional reports, economic forecasts, all that stuff.
To get a sense of.
Yeah, to measure the uncertainty and get this, it's at its highest point since the peak of COVID back in 2020.
Wow, that's pretty wild. But here's where things get really interesting. Okay. The article then says that this high uncertainty could actually be a good sign for stocks.
Yeah.
That's like saying rain is good for a sunburn. Help me understand this. I know, right?
Yeah.
It seems counterintuitive, but the data actually tells a different story. Since 1991, the S&P 500 has seen some pretty impressive gains after periods of peak uncertainty.
Really?
Yeah. For example, after hitting those high uncertainty levels, the S&P 500 has averaged a return of like 1.4% over 1 month, 5.8% over 3 months, 10% over 6 months, and a 14% return over a year.
Wow. So it's like they're saying that when everyone else is freaking out, that's actually the time to buy?
Yeah, it's that whole contrarian investing idea.
All right.
When others are fearful, that's when you get greedy.
Okay, so are markets just kind of overreacting to bad news then?
A lot of times.
Yeah.
And that can create some really good opportunities for those who are willing to look past the headlines.
Interesting. So let's shift gears a bit and talk about tariffs, because the article points to them as, a major source of uncertainty right now, but it also suggests that tariffs might be more of a negotiating tactic.
Right.
And that their impact on the U.S. economy might not be as bad as some fear.
What do you think about that?
I'm not sure. Honestly, tariffs just sound scary to me.
Well, the article makes this argument about the structure of the U.S. economy.
Yeah.
So exports and imports combined, they make up about 25% of the U.S. GDP.
Okay.
But compare that to like 84% for the EU, 73% for Mexico, 67% for Canada, and 34% for China.
So the U.S. is less reliant on...
Exactly. The U.S. economy is less reliant on exports and imports than a lot of its major trading partners.
Huh. So does that mean we have a little bit of a buffer zone when it comes to tariffs?
That's what the article is saying.
Yeah.
It gives the U.S. more leverage in these trade negotiations. It's almost like a game of chicken. And the U.S. might have a stronger hand.
Okay, that actually makes me feel a little better about the whole tariff thing. But now the article's recommending something else. It says to overweight financials in this climate.
Interesting.
Why would financials be a good bet right now?
Well, for one thing, financials tend to be less exposed to international trade.
Because...
Only about 22% of their sales are made overseas, compared to 40% for the S&P 500 overall.
So they're more focused on what's happening here in the U.S.
Right. Exactly. So they're kind of shielded from these global trade tensions.
That makes sense. So are financials just more stable in general then?
Well, they do offer a certain level of predictability, which investors like, especially when everything else feels uncertain. But there's another interesting point the article brings up about financials and why they might be doing so well. It seems like institutional investors are really betting on financials right now.
Wait, hold on. What are institutional investors?
Oh, yeah, good point. So those are basically like the big players,
Yeah.
Pension funds, mutual funds, those kinds of organizations that invest huge amounts of money.
Got it. So they probably have access to way more research and analysis than, the average person.
Exactly. They're the ones with all the fancy algorithms and teams of analysts.
So it's not just this one article saying financials are a good bet. It sounds like the smart money is on board too.
Yeah, pretty much. And this article might actually be explaining why they're choosing financials.
Oh, really? How so?
Well, remember how we were talking about markets overreacting to bad news?
Yeah.
Institutional investors might be seeing that the fear around tariffs is kind of overblown, especially when it comes to U.S. financials. So they're thinking this is a chance to buy while things are maybe a little undervalued.
So they're playing the long game. They're betting that financials will weather the storm better than other sectors.
Yeah, exactly. They're not just thinking about the next few months, they're looking years ahead.
That's pretty smart. But is there any historical data to back that up? Like, have financials actually performed well during uncertain times in the past?
Oh yeah, totally. The article actually mentioned that too. It pointed out how financials have consistently outperformed the broader market during times of high economic policy uncertainty.
Interesting.
Yeah, like for example, after those periods of peak uncertainty we talked about, financials have averaged returns of 4.6% over 3 months, 8.3% over 6 months, and get this, a whopping 22.8% over 12 months.
Wow, that's impressive. So it's not just a fluke, there's a real pattern there.
Right. It's not just random luck. There's actual historical data to support this idea.
This is really fascinating. I feel like I'm getting a glimpse into how professional investors think. It's not just about, freaking out over every headline. It's about understanding the bigger picture, the long-term trends.
Exactly. It's about looking beyond the surface and digging into the data, seeing what's really going on.
So wait a minute, are we saying everyone should go out and buy financial stocks now?
Oh, whoa, hold on a second. It's not that simple. This is just one article with one perspective. Remember, we always say do your own research before making any investment decisions.
Right, of course.
But what this deep dive does show is that it's super important to think critically about the information that's out there. Don't just blindly follow the crowd.
Yeah, because what might seem scary at first, like all this economic uncertainty, could actually be a good thing if you know how to approach it.
Exactly. It's about recognizing that fear can drive people to make irrational decisions and learning how to separate those fears from the facts.
Well said. So where do we go from here? We've talked about the U.S. economy and how it might be positioned, but what about the rest of the world?
Yeah, that's a great point. We haven't really considered the global impact yet.
Right. If the U.S. is maybe a little insulated from tariffs, does that mean other countries are more vulnerable?
It's definitely a possibility. And if so, could there be investment opportunities in those markets that we haven't even thought about?
That's an interesting thought. Could there be hidden gems in the places everyone else is overlooking because they're too focused on the negative?
Maybe. Remember, every challenge creates new opportunities. It's all about perspective.
I like that. This whole deep dive has really opened my eyes to how much opportunity there is out there, even when things seem uncertain.
It's all about knowing where to look and how to analyze the situation.
This has been an incredible deep dive. You've given me so much to think about.
It's always a pleasure to explore these topics with you. And remember, the learning never stops.
Absolutely. So to everyone listening, if you have any other articles, research papers, or even just random thoughts you'd like us to explore, send them our way.
We love a good challenge, and we're here to help you make sense of this crazy world.
Until next time, keep those minds engaged and never stop learning.
And remember, fortune favors the well-informed.
Okay, so we've talked about how economic uncertainty can create some interesting opportunities, and we dove into why financials are looking pretty good right now. But before we wrap up, I'm kind of curious about the bigger picture. Like, what are some other potential opportunities that might come out of this whole situation?
That's a great question. And, we touched on this earlier, how other countries might be more affected by tariffs than the U.S.
Right.
So if that's the case, could that actually create openings for investors who are willing to, look beyond the U.S. market?
So instead of just thinking about what to avoid, we could also be looking for potential growth in these, vulnerable markets.
Exactly. It's all about perspective. Remember, every economic shift creates winners and losers.
Right.
And if the U.S. is kind of insulated from the worst of it, it stands to reason that other countries who are more reliant on global trade might face bigger challenges. But within those challenges, there could be some really interesting opportunities.
So it's like flipping the script. What seems like a negative for some could actually be a positive for others.
Exactly.
Yeah.
It all comes back to that contrarian mindset we talked about earlier.
Yeah.
While everyone else is running away from these markets, some investors might see them as hidden gems.
I'm starting to see what you mean. It's like Everyone's so focused on the fear that they're missing the potential upside.
Exactly. They're letting fear cloud their judgment and potentially missing out on some great opportunities.
Wow, this whole deep dive has really opened my eyes to how much opportunity there is out there, even when things feel uncertain.
That's what we're here for. Remember, knowledge is power, and the more you understand about, the forces that are shaping the world, the better equipped you'll be to make informed decisions.
Not just about investments, but about life in general.
Exactly.
Well said. So as we wrap up this deep dive, what are some key takeaways you want our listeners to walk away with today?
Okay, well, first off, remember that uncertainty is a normal part of the market, and it doesn't always have to be a bad thing. In fact, it can create some really interesting opportunities for those who understand how to navigate it.
Right.
Second, don't just react to headlines. Dig a little deeper, analyze the data, and form your own conclusions.
Don't just follow the herd.
Exactly. And finally, remember that every challenge presents a potential opportunity. So by staying informed and thinking strategically, you can not only weather the economic storms, but you can actually thrive in them.
Those are some fantastic insights. I know our listeners are walking away from this deep dive feeling empowered and ready to tackle whatever the market throws their way. Thank you so much for sharing your expertise with us today.
It's always a pleasure. And remember, the learning never stops. Keep exploring, keep asking questions, and keep pushing yourself to understand the world around you.
Absolutely. To all our amazing listeners out there, thank you for joining us on this deep dive. We hope you found it as insightful and engaging as we did.
We had a great time.
And remember, keep those questions coming. Until next time, happy investing.